Hi guys, good afternoon. This is Abid Khan and you are watching Karachians Academy YouTube channel. We are doing CIE IGCSE past paper and we have selected 2021 year October November attempt question paper 0452 paper 2 and variant 2, right? So we have done with 4 questions and now today we will be doing the last question, fifth of this paper. And if you want to see, you can see our playlist and there you can find all the 1 to 4 questions. Let's move on to question number 5. Okay, this is our question number 5. Simon has a business selling office stationery. So he is selling office stationery. So office stationery is his office stationery are his goods, right? So because he is dealing in office stationery. So this question, let us see what, first of all let us see what is required here. Complete the following accounts for each of the year ended 31st December 2019 and 21. You have to make accounts for 2 years, right? Okay, balance the accounts. Okay, you have to balance at the end of each year where appropriate, right? And which account you have to maintain? Delivery vehicle account, right? And provision for depreciation account for delivery vehicles, okay, and disposal account, vehicle disposal accounts. So you have to make 3 accounts. This is quite question A, 5A, right? You have to make 3 accounts. Number 1, the vehicle account, its cost account, right? And its depreciation, provision for depreciation account and disposal account, right? So we will make, and he has given very carefully see what is given. So he, in provision for depreciation account, he has already given you 11,000. So while making this account, you have to consider this very carefully. So, and you have to solve question on the format given here. I will not be solving here. I will be solving on the upper page where the question is given. But when you will be solving, you solve it here, right? And consider this 11,000. Okay. Vehicle delivery account on 1st of January 1st 2019, he has given you balance of 55,000. Means you have this balance, so you have to consider them. Okay, move on and do it. Now we will carefully read the question and simultaneously I will be explaining you the part of the questions, right? Simon has a business selling office stationery, right? On 1st January 2019, he owned 2 delivery vehicles which had been purchased on 1st January 2018. Okay, 1 year back he purchased those equipment. So 1 year depreciation has already been applied on it, and then on that account, on provision for depreciation, you have seen 11,000. It is the depreciation of 2 years, right? It is the provision for depreciation. Okay, delivery vehicle A had cost 30,000, right? And B cost 25,000. So 30 plus 25 equals 55,000. So already he has given you this 55,000 balance and depreciation balance is already given, right? So move on. Simon uses the straight line method. Always highlight or take the important points so that you do not ignore them or miss them out while calculating your and while solving your question. Simon uses the straight line method for depreciation, for depreciating the delivery vehicles. Okay, a rate of 20% per annum on cost. Okay, so 20% will be applied on original cost, right, with the rate being applied for each part of the year for which the delivery vehicles are on. Very carefully read this. What he is saying? He is saying with the rate being applied for each part of the year. Each part of the year. It what does this mean? Means it means month on month basis. How many months in a year a vehicle remains in the business, you have to charge month on month basis depreciation, right? If a vehicle is a full year, then you have to charge full year. If it is a 3 months, so then you have to charge 3 months depreciation. Okay, move on. So 20% is the rate, and it is straight line is the method, and it will be applied on cost 20%, right? These points are very much clear to us. Move on. Due to a decline in business, delivery vehicle B was sold on 31st March 2020. Okay, and a check of rupees 10,320 was received. So this is your sale proceed. $10,350 is your sales proceed, and they are selling it on 31st of March 2020. It means how many? 3 months. 3 months. Vehicle B was in the business for 3 months in 2020. Okay, and we have to make all the 3 accounts, right? What I will do, just actually space is very low, so okay, we can make account here, no issue. At least the delivery vehicle account we can maintain here, because space is not there, otherwise I could have made all accounts there. Okay guys, or I can make the account here, no issue. Number 1, question 4A, vehicle account. Simon books vehicle account. Okay, second account that you have to make is provision for depreciation. The provision for depreciation. Third account you have to make is disposal of vehicle account. For this, and you have to maintain it for 2 years, 2019 and 2020. So first Jan 19, they have given you balance of 55,000. Here, first Jan 19, they have given you balance of 11,000. Disposal account we have to maintain, right? And we have to make these accounts for 2 years, 2019 and 2020, right? Okay, let's move on. A few calculations then, which I will be doing here, uh, just to make you understand. Remember one thing: when he bought this equipment, actually he bought both of these two vehicles on 1st January 2018, right? So number one, they remained full year in 2018, right, and full year in 2019. Vehicle B was disposed of in 2020. Means 2 years depreciation is sure. You have to means make 2 years depreciation, right? So if we see how much is the depreciation, this is just one working I am making here. I am deleting this. This is working one, and depreciation vehicle A depreciation, if we calculate, its cost is 30,000. Depreciation rate is 20, because this is a straight line method. So you know straight line is method applied on the rate is applied on original cost. It is not on the WDV. It is the original cost. Original cost is 30,000, and 20% you have to calculate. And if you calculate it, just hang on. Okay. Right. 30,000, 20%, 6,000. So per annum depreciation would be 6,000 on B. Per annum depreciation cost is 25,000. Rate is 20%. So 25,000 into 20%, this will be 5,000. So your annual depreciation on both of these two equipment would be 11,000. This for 2018, because these equipment were purchased in 2018. So this 11,000 he has already given you here, right? So this is depreciation for, and what will be the dep here? Okay, month on month basis I already explained you. Just I am okay. Okay, here 3 months. So for vehicle B, so this 11,000 will be charged in 2018. This has already been charged, and as you are making the accounts for 2019 and 2020, so in 2019 this 11,000 will be charged as is. Okay, okay, 11,000, right? So 11,000 will be charged total in 2019, right? So if okay, you are making let's see for the 2020, I am seeing this vehicle B, it was with us for 3 months, right? So vehicle B, you can say this is working number 2. Vehicle B remained in the business for 3 months because it was sold on 31st of March. So vehicle B depreciation for 3 months would be 5,000. Right. 5,000 is annual depreciation. So divided by 12 into 3. So this will be 5,000. Okay, 5,000 divided by 12 and 3 months का depreciation you have to calculate 1250. For 3 months this will be the depreciation, right? Okay, this will be depreciation for 2020 for vehicle B, right? For vehicle A will be complete 6,000, right? So we have to make accounts for 2 years, 2019 and 2020. So this 11,000 is a total depreciation. So you will be making an entry in 2019. So depreciation, what will be you making your entry? Your depreciation expense get debited with 11,000, and 11,000 your provision for depreciation get credited, right, in 2019, right? So you will put it here. So 11,000. So this is provision credit. You are crediting the provision here. So this provision, because of, you can say that this depreciation expense, and this depreciation expense will close into the income statement. So then directly you can write the income statement, P&L or income statement, right? So what will be 22,000 will be your total, and this entry you will pass on 31st of August. So when you will close it, it will be 22,000. You will balance it and close it. So on 31st of 12/19, your balance CD will be 22,000, right? Okay. Okay, so this on 1st of January 2020, you will bring down the balance in provision account by 22,000, right? Likewise, you have to close your cost vehicle account. So the 55 is debit. When you will close on in 2020. So on 31st of December 19, your balance CD, your carry down balance CD would be 55,000, right? There is no addition, no deletion during 2019, right? So this closing will be brought down on 1st of January 2020 as your balance brought down 55,000, right? Now what happened in 2020? See, okay, working 1, 2, and I will say working 3. You can make working 3. Okay, right. In 2020, vehicle A depreciation will be a complete year, full year depreciation, which is 6,000, right? 2020 A depreciation 6,000, and B you will charge a depreciation of 3 months, which is 1,250. So your depreciation for the year 2020 would be 7,250, right? Then you will make its entry on depreciation. You do not have to make the entry. I am just making your concepts clear. I am making entries so that in depreciation expense, and this depreciation expense will close into the income statement 7,250, and your provision for depreciation will get credited 7,250, right? This 6,000 you will make on 31st of August, and this 1250 you will be making on 31st of March, right? You can split them off, no issue. So you will make this entry of 7,200 for the depreciation. Okay, so income statement will get debited with 6,000. Your date will be 31st of December and 1,250 on 31st of March income statement, right? Or you can write it earlier, 31st March, write it earlier, right? So this depreciation you will charge during, okay. Now we have calculated the depreciation, we have calculated all. Now in 2020, what they have done, see, in 2020, due to decline in business, delivery vehicle B was sold on 31st March 2020 and a check of rupees. Now we have to see how much we can make the working for. We can make the working for here. Working for. So vehicle B cost is 25,000. Accumulated depreciation is how much? 5,000 here and 5,000 here. Sorry, here. Vehicle A. This is vehicle A. Vehicle B. So 5,000 is month annual depreciation for vehicle B. So the vehicle B depreciation would be 5,000 for two years plus 1,250. So this will be 11,250. So this is your depreciation if you deduct it. So how much would be? 25,000 minus 11,250, 13,750. Just hang on. $13,750 is the net book value, and how much it was sold for? It was sold for 10,350. It means the cost was 13,000 and you sold it. It disposed this off in 10,000, means you dispose this off at loss. So loss on disposal is 13,750 minus 10,350. This is 3,400. 3,400 is your loss. So you have to complete your account for 2020, and you remember when we dispose of equipment, so the total cost of the equipment is credited and it is transferred to disposal account. Disposal account is debited. So this out of this 55,000 to 5,000, 25,000 you will credit, okay, and this entry you will make on March 31st of March. And where have you taken this? To disposal account, right? So disposal account will get debited. You will make the entry disposal account debit and asset account credit, right? So 25,000 is credited on 31st of March due to vehicle account. So this part you have done, okay. And when once you have transferred the asset, then its accumulated depreciation you also transfer to the provision account, disposal account, right? So how much you have the accumulated depreciation of vehicle B? So you have 11,000 and how much? 11,000. This is the depreciation. 11,250 is the depreciation accumulated, which you have in the provision account for vehicle B, right? So when we are disposing it off, then no need of keeping the accumulated depreciation, then debit the accumulated depreciation and credit the disposal account. Then here what you will do, you will credit this 11,250 you will debit the provision account on 31st of 12 and you will credit disposal account 11,250 on 31st March, okay, and where it has come from provision for depreciation, right? 11,250, the difference is, is so what, when you will get when you will receive this money, you are getting 10,000, right? This is the sale proceed. What will be its entry? Ultimately you will debit your bank account 10,350 and you will credit your disposal account, because there is no account for vehicle B, cost account or its vehicle account, because all has transferred to the disposal. So whatever the sale proceeds you are getting, it will be transferred to you will credit to disposal. So 10,350 disposal, you are getting disposal. So this 10,350 bank 31st 3. How much is the balance? The balance is, because you can see this is 25,000 and you already know the total 11,000 and this is okay 13,750 and 11,000, it is 13,750. So your loss is disposal on disposal, loss on disposal is this much, right? So ultimately what you do not have to make the entry, but how this will impact your income statement will get debited by 3,400 and disposal account. So you will transfer this disposal loss to the income statement, disposal credit and income statement debit, right? Here with this 3,400 income statement 31st 3. So with this entry, now your disposal account is closed, right? 55,000 out of this 55,000, when you will close it, this is 55 and here this will be 55. Your balance on 31st of 12, balance CD will be 30,000. So in your vehicle account on 1st 2021, so your balance BD would be 30,000. Now, okay, likewise you will do it here. So how much will be your balance? So 22,000 and 7,000, 22,000 plus 6,000 plus 1,250, it is 29,250 minus 11,250. So the balance in provision account is 18,000. This is 31st December 2020 balance CD 29,250. On 1st of January 2021, your balance CD in provision account will here is 18,000. Right guys, so this is the whole question. We have maintained the vehicle account, we have maintained the provision account for 2019 and 2020. We have opened up the disposal account and we did the disposal and we charge it to the P&L account, and we're done with disposal and disposal account is closed. So your requirement for A is done. So that's all for today. So if you have any query, you can write to us, or if you like this video, then please tick the like button, right, and share it with other students, that all the other students should also get benefit from this video. Subscribe our channel so that you get all the latest update. Thank you very much and bye for now.